Arvind, you track crude with a magnifying glass, but of late what I understand is that you're bearish on crude and bullish on natural gas. Now, why is that?
Yeah, I think fundamentally the bull story for crude was based on lack of supply growth and strong demand growth. I think as countries like India and others are coming to the realization that subsidizing crude consumption is not a good idea, I think that the crude demand growth story is clearly slowing down. It has already slowed down dramatically in China. I think it'll slow down in other emerging markets also. And it is, on a negative trend in Europe and, flat to maybe moderately down on a structural basis in the U.S. Plus, I think in the U.S. you're going to see meaningful shift in trucking transportation from diesel to natural gas over the next 4 or 5 years. So all of those suggest that the demand growth story is clearly going to be much more slower than it has been in the past. And on the supply side, with the U.S. shale-related oil drilling driving production growth over the last couple of years and likely to continue over the next few years, plus production growth out of some of the Middle East countries like Iraq that have surprised on the upside, plus production growth out of Canada, all of those suggest that the crude supply-demand story looks less tight over the next couple of years than it has looked in a long, long time. Therefore, we are much less bullish on crude. And it is not to say that crude is going to go to $50, but it's just to say that the $90 to $100 range that we are in right now in Brent might not move up much over the next couple of years.
Arvind, but what is your assessment? Do you think for equities to bottom out, Indian rupee or currency market has to bottom out first?
Everything else being equal, yes, but everything else is not equal. So Indian currency was crashing when crude was correcting significantly in the last few months. So it doesn't necessarily hold that a weaker crude is per se, because it's a bit of a circular logic. The part of the reason for the weaker crude is weaker demand out of China, and if the weaker demand in China is because of slower growth, you would rather have higher growth and higher crude prices than slower growth and lower crude prices. So I don't think that that's always a given. But everything else being equal, if crude is weaker because of supply growth elsewhere, then it's good for China and India.
So, Arvind, from a 6 to 12-month perspective, which are the asset classes you are bullish on? Bonds, commodities, emerging market equities, developed market equities, and where are you allocating disproportionate amount of money?
Well, I'm not sure I can answer that for all investors in all different markets, or certainly let's say an Indian investor looking at it. But from my standpoint, I would say that the way that I would recommend it is in a market and a world that is as uncertain as it is right now. We certainly are adopting a much more dynamic portfolio, kind of moving around strategy. But we like U.S. natural gas, which you can't really play in as an Indian investor as a story. We like companies which have fundamental growth driven by bottom-up fundamentals. So I would look for companies which have a growth driver, and I would look for companies which have a deleveraging driver, and companies which are in a dividend growth strategy and returning more cash to shareholders. I think cash returns are going to be a scarce commodity. I think having managements which are trustworthy is going to be very important, and having companies which are where they realize that balance sheet leverage is not a smart thing in a world as uncertain as it is right now, but are looking at at managing within the confines of their balance sheets. I think that those would be important criteria.
Arvind, what I also understand is that you are a gold bull. So at these levels, what makes you bullish on gold?
I am still a gold bull, but I guess maybe I would say of all the commodities that I look at, outside of U.S. natural gas, gold would be the one that I'd be most bullish about. Yes. We're assuming that if growth slows further in U.S., which I think is likely, and in Europe, which I think is a given, that the central bankers will continue to do what it takes to provide liquidity. And while that liquidity is not going to create demand for oil or copper or aluminum or other commodities, because that demand is going to be driven by consumers in China and India and other emerging markets, but it is going to drive demand for some hard asset, given that we're in a world where central bankers are practicing financial repression, where you're getting negative returns in many asset classes. Therefore, I think gold becomes one of the few safe havens, and therefore, yes, I do believe gold will be one of the better performers.
Arvind, the word on currencies, dollar index is now marching towards the new 3-month high, and euro has plunged to a fresh 2-year low against the dollar. Are you a bit surprised with the weakness in euro?
Well, against the euro, I'm definitely not surprised. On a purchasing power parity, I still think euro is moderately overvalued. But the question is, why has the euro taken so long to come down? Is more the question again versus the dollar. But if you look at the dollar against other currencies, I would say that again it is still fulfilling its safe haven status in an uncertain world where financial uncertainty, economic growth uncertainty, and what have you is rampant. Then dollar still fulfills the role of the reserve currency, and some have described the U.S. as the tallest midget, and I think that's a description that that I would not disagree with.
Arvind, so if you have to construct a large cap India portfolio, let's nail it down to some large cap stroke blue chip Indian stocks you're bullish on.
I would say that some of the infrastructure stories, at some point here, do companies like L&T or Reliance, which are market leaders, large cap companies that have come through tough times, that have fallen out of favor. Those are the type of blue chip stocks that I'd be looking to buy. I don't need to take the speculative bet and buy too many mid-cap value names, but blue chips where I think that the fundamentals, the bad news is in there, and you could see a turn in fundamentals both from a policy standpoint, and if you got some gas price action on the gas prices long term, then names like Reliance would benefit. If you got something on the infrastructure side, names like L&T would benefit. So I would look for blue chip Indian names that have fallen out of favor.
Arvind, a delight and a pleasure to have you on this edition of Market Makers, and certainly hope to see more of you going forward. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.